This is Eric Mwather with Mwather.com. We're going to take a look at some of the stock picks you provided to me so we can see whether they meet the minimum requirements for quality breakouts. Before I begin that, I wanted to take a look here at the market's down about 300 points on the Dow, and it's because, even though the market had been creeping higher, you'll notice that here on this line here, the turquoise line, once we broke that, I was a primary line connecting to lows, and you can see this on this chart, but we broke lows here on the RSI somewhere around in this area here. Once we broke down, market's been down about 600 points in the Dow over the last 2 days so far, maybe a little bit more than that, but mainly because we are breaking below the primary lines which connects to the lows of October of this year. If I can show this now, remember the market is right now. The reason why I want to start with the market is because the first thing you have to account for when you're picking stocks is the market direction. 75% of any move in the market, any stocks move, individual stocks move in the market, is based on the general direction of the market itself, of the Dow, of the S&P 500, of the Nasdaq. So if you don't account for where the market is going, you're going to find yourself sometimes just picking the right stocks, but the market might not be playing a bullish trend, and so even the best stocks will not make you money. In fact, they'll turn around, fail, and be on a losing stretch. So the number one thing as investors we have to account for is the market. That's why I'm starting my videos with the market here, because what I'm trying to say is that even irrespective of the quality of the stock picks on your list, right now I wouldn't be buying stocks right now. I would either avoid buying stocks or net being cash or net have some short positions out there. The reason why I wouldn't be going out and buying any of the stock picks, irrespective of how good they are, is because if the market is going down, and then most of the stocks are guaranteed gonna be under pressure. Now, as you know, over the last couple of weeks we've talked about this triple top on the RSI. Coming into the weekend, the market closed right there on resistance, and we've seen the last 2 days, Monday and Tuesday of this week. Today being a Tuesday, the market is now below this level here. Another thing we have to watch for here in the coming days or weeks, whenever that happens, is there is a primary line here that connects this RSI level here. Line should be straight, but should we ever break below that line, that's going to suggest again another big drop in the market. Now, some of the world markets have already done so, and I believe one of the markets to do so is either the German market or the French market. Okay, here's a French market on a daily chart. We ended the week on a very positive note here. People were talking about markets breaking out. But I pointed out that the fact that we had come back to this resistance level, which had been resistance on multiple occasions, like the red circles here correspond to highs here, highs there, highs there. You can't argue with it. So we came here, made a high, which is that point there, dropped down a little bit, went to new highs, but we just came back to that general area. As we stall, now we see that we are breaking below this area here. So this is below the red line. That's why it was down 5.3. Now remember, this doesn't happen all the time. It doesn't happen. It's important to put this as deep in your subconscious as possible. These moves only come when certain things happen. Number one, we slashed below 50. Good for a big drop. Number two, we broke below this trend line, primary trend line that connects it to the lows, to 2.5-year lows. So so that break of that primary line and moving below 50 is the reason why you have to be careful picking stocks here, irrespective of the individual stock's quality. Now, if we take a look at the Dow Jones on a weekly basis now, is number one. Notice we are moving below 50. We close at about 53 at the end of the week, which is corresponds to that close there. So as we move below 50 this week, not only are we going to be looking at a market that wants to go down at the end of the week, but also for today. For today, the possibility of the market doing the same thing as a French market, which is move below 50, even now with the Dow now down 300 points. It's down 300 points, and yet it could slash below 50, either today or tomorrow or whenever. Or maybe it could find support on this red line. I don't know. But right now, given the fact that the weekly is about to move, is already below 50, which tells me a big down week, the daily should also probably close below 50 today. If it does close below 50 today, tomorrow, or whenever, you're going to see this market way below this current level. So this here could only be intraday action. By the close, the market might be down about 400, 500 points if it's going to do what I think it's going to do. If we take a look at the hourly charts here, this is now the 30-minute chart for the Dow. 30-minute chart. Notice that if you do a straight line here, once we broke down here, it's why we are down this much, 314 points, give or take. Okay? Just because we broke that trend lines. Primary trend lines, when you break those, markets go down in a hurry. Also notice that that corresponds with the RSI break. This is the low in October. And if you draw a straight line connecting these levels here, we broke down here, hence the 300-point drop in the market. What I'm trying to say here is, at the end of the day, when you're picking stocks, you have to account for market direction. Right now, I'm looking at market direction, which seems to be indicating the markets are going to be under pressure. So if you feel that, and if you can see that your analysis is going to indicate a down market, then you should probably not be looking to buy stocks. Now, you can continue doing your research because you want to have a list of stocks ready should the market turn around. But for now, you just hold off and watch your group of stocks. And if the market finds support, starts moving higher, a good quality stock is going to break out before the market does. So let's take a look at the stocks here. Let's take a look at Amazon. Now, Amazon has been a great stock over the last couple of years. And as you can see, using the ultimate mother breakout, it broke out here, which corresponds with this, the price breakout on the monthly. Now, I'm starting this video with a three-year monthly for all the stocks you sent me. So we are breaking out here, which corresponds with this area here. Nice break to the upside. So back to above 69.10, and also but right now what we are looking at now, this is last year in September, but for now all you have to do is find the price there, which should be about 200 and I would say 23, somewhere around there, and set an alert. Next time you see the Amazon.com move above that level, which could happen, you want to be a buyer. Also, I like the fact that the RSI still remains above 69, which is good. You want a quality stock to hold above 69.10. The more it holds above 69.10, the more superior the stock is. So again, remember, the more the stock remains above 69.10, the more the stock is showing you its superior nature. So Amazon, I would set an alert for it based on the highest monthly close. Also, should the time come when Amazon is breaking out, you'd like these MACDs to be moving, at least one of the market time frames to be making a new high. Okay, so watch out for that. Remember, ultimate mother breakout, you want at the time of a breakout, price to break out, RSI to break out to a 3-year high, RSI to either move above 50 or either move above 69.10 to show that it has superior or has a promising look of a past winning stock setup. APL, again, pretty impressive here. I like what you're picking here. And just for, look, this one looks good. This is exactly what you want to do. I have to say here I give you a 100% in terms of your stock picking here, because we had a nice move. You always want to have a stock, and maybe I haven't talked about this in my last videos to you, but whenever you're buying a stock, always look and see how it performed when it was on a rally mode. You see here we moved from about 250 all the way to 1250. That's a good stock. So we paused for about 2 months. We broke out here, and we broke out from about 1250 all the way to about 3750. So this is a stock that tells me that it has the DNA, it has the character, it has the desire, it has the potential to repeat. So always look back and see. You don't want to buy a stock that has never rallied. You want a stock that has a history of moving higher. And this one is a perfect example. It broke out, moved from 250, had a nice move even to here. It was about 750, threefold, settled down for a couple of months, broke out again from about 750 to 1250, settled again, broke out, settled again here and broke out, settled again here for a month and broke out again. So here's a stock that is showing you it has the making of a quality stock. So I would set the whatever the highest monthly close here, which is going to be about 36. Set an alert, forget about it. Next time the stock moves above this, you'd like the RSI to be moving above 69.10. Notice what happens when the stock broke out here to new highs in January. It moved immediately from about 23 to about 37.50 in about 3 months, which is a good gain if you consider. I mean, that's not bad. That's 50% gain in a couple of months. That's not bad. So actually a good return. So you would like it, should it break out again, you'd like the stock to move above 69.10, because it's not going to be able to make a 3-year high, because we already have this area here, which is preventing it from making a high. But at least you want at the breakout, should it ever come, you want the stock to be trading above 69.10. So good catch. Now, also you'd like the MACDs to be doing, this MACD is fine, because should the stock move higher, this MACD is going to be making a new high, which is precisely what you want. And this one is going to be crossing over. So the MACDs are going to be at least meeting the minimum requirements for a breakout, which is MACDs should move to fresh 3-year highs, or at least move to at least one of them move to a fresh 3-year high on the MACD. So this one looks good. Costco here again, it's a great find. You're on track. I have to say I'm impressed. This is good. Again, it broke out here about 3 months ago. The buy point was at about, I would say about $82, which was the highest close. And again, Costco's gone it's a large cap stock, and you'll notice that it doesn't really move as much. So here, between the prior chart and this one, I would say it's not a bad stock. Let me explain something. But you can tell from history, it's moving from 35.50 here to about 57.50. So about $20, I'll give or take. Okay, $20 move in about. Now this is moving from $20 when the market was on fire. You had stocks moving from March 2009 lows to about middle of or early 2010. Stocks were up 400, 500, 600, 700, 800, 900, even 2,000% in this time frame from here to here. So what I'm trying to say that even though this is a good looking chart, because it's breaking out here, it's back above 69.10, which is good. You have a breakout that it hasn't failed, despite the market moving lower right now. It's still above this level, which is what you want. You want your stocks to stay above breakout levels, just like it stayed above breakout level here. That's a good stock. It stayed above breakout level here. That's a good stock. That's what you want. You want stocks that hold above breakout levels. So I would say it's a good stock, a good find. But in terms of movement, it's taken this stock more than 3 years just to double in price. It's not bad, but if you want to put your money in the best possible position, you want to go with stocks that are showing you potential to triple, quadruple, to double in a short term, like APL. this one here, notice while Costco was moving for almost 20 points, which is good for about maybe 60-70%, this stock between here and here was up, I would say, about 600%. Okay, that's a big gain. So you want, you want to go with stocks that show you potential, past potential, and which might tell you what they might do. So, it's not a bad, Costco not a bad pick. Honestly, it's probably better than 98% of the stocks out there, or maybe 95% of the stocks out there based on the chart. But if I was forced to pick one, I would probably go with APL. EEP, not a bad stock, but compare this one, which is in the same group as APL, right? They are all energy. This one has moved from about 10 to 32. So about, let's say, about 200% gain, right? It's not bad, right? Here it doubled here and then doubled again. Or maybe, 200% is what I'm trying to say. It's not bad, but it's not the 600% gain in APL. You always want to go with stocks that show you potential to move. Also, I don't like these drops here. What's up? What's up with that drop? Even though it recovered, and what's up with this drop here and this drop here? So this stock has a tendency of instability. I don't like that. Also, I see that on a monthly, this big down month, there's a lot of instability on this chart. It's not a bad stock, not bad, but I would say if you really have to follow it, just place an alert when it moves above 32.50, give or take, somewhere in that region. But I would not follow this one. It's a good pick, but I'm trying to say in terms of quality, it's not your best quality because it doesn't have a history of a superb run. And also, the MACDs are not close to making highs. In fact, one here is a bearish crossover. You like them closer to breakout level, just before they break out. So, if you want to track it, that's fine. It's actually not a bad pick, but I would go with something that has shown me potential. ENB, same as another energy stock. Same scenario here. We got moved from about 14 to, again, it's almost similar behavior to the prior chart. It's not bad. It seems to be a little bit more steady in its trend. So between this one and EEP, I would go with this one. Between the two, that is, if I was forced to pick one, just because this one has more stability. Number two, this stock, unlike EEP, is still holding. EEP is not holding above its RSI above 69, yet ENB has been holding above 69. So that's a more powerful stock. It's been holding its bullish performance longer than the prior chart. So I would say this one is one I would track. Quite frankly, it's if you bought it, the breakout level was here about $33 and a half, which was a closing high right there. So whoever bought this is still in the positive because the stock is still above the breakout point, which is the green line. Now, it's not a bad pick, but you can see it didn't move quite as emphatically as other stocks, almost moving about, I would say, 150, give or take, or since March 2009 lows. Not bad, but it's not gonna be in the top performing list of performers. Also, notice, and I think on my secrets, I talk about a phenomena called penetration, angle of penetration. Now you see the angle of penetration as the stock moves above 69.10 is shallow, which tells me as it turned ultra bullish here, it was a shallow penetration above 69.10 level. The sharper the break above 69.10, the sharper the move months into the future. Now, as this one went in the shallow break above 69.10, you can see the performance was not as steep. The performance was not as steep. And it's shallow. It's a shallow rally because, and you could have told that by understanding right here, that penetration was shallow. You see what I'm saying? And because the penetration was shallow here, which corresponds to this breakout here, you knew that the stock would move higher, but it would be a shallow run. Great stocks have steep angles of penetration. It's just a phenomenon. Maybe Amazon on this list will show you what I mean. Amazon is one of the great movers over the last couple of years. Look at the angle of penetration here, which is very steep, and the angle of penetration here, slightly steep. But now, notice in February, we had another move, but it was a shallow move back above 69.10. You see, what happens here is we went below 69.10 and then we moved back above 69.10. But the angle of penetration was shallow. And given that, you see that even though it moved higher since this breakout here, the angle of penetration was shallow here. So you knew that the move would have been a little bit shallow, not as sharp as prior movements. Now, let me see whether I can just pull up a great stock that I can show you an angle of penetration. Just gonna see whether I can remember one, any pick. Okay, this is, I want to go to a monthly chart because we're looking at, now remember all time frames, it's the same. Notice this angle of penetration here, and you always want to go back and see what the history of angles of penetration for a stock, right? You see that angle of penetration very, very steep as it moves above 69.10 there, corresponds with this breakup. But look at the performance. It moved from about $1.50 all the way to about $3.30. So now as it comes back, now notice how this one was a spike. This one was a shallow move. But I don't want to confuse you. But understand something. This is a quality stock because number one, it moved above 69.10 here, came back, and even though we have a steep angle of penetration here, once it made a new high right there, somewhere around here, which is in April, corresponds to this breakout above this intraday high. And that suddenly we have this spike. So that spike didn't come from this shallow angle of penetration. The spike comes from the fact that the stock was making a new three-year high on the MACD, which is this area here, right there. So the angle of penetration was shallow, but we immediately moved to a fresh 52-week high, fresh 3-year high on the MACD. And whenever you see that, you see this huge spike from about $3.30 all the way to about $5.30. So, I mean, it was almost an 80% jump in about a month and a half. That's a great move, okay? And now, all I want to show you here was the angle of penetration. So remember, you always want to go back. For example, let's take a look at a long-term monthly view of EGHD. Now, just based on this stock here, you'll see that in 2000, it had a very steep angle of penetration here. Again, another steep angle of penetration in 2004. So once it breaks out here, no, I want to show you. Once it moves to a fresh 3-year high, no, that's not, let me try to show you. Once it breaks out to a fresh 3-year high here, which corresponds with this is the fresh 3-year high right there, corresponds with this move here. So the ultimate mother breakout was in play because we moved to almost 6.5 year RSI highs right there. And we knew, you could have known that that could have led to a big move because the stock has a history of sharp moves. It's happened twice in the last 11 years. And also, while we're talking about the angle of penetration, it's the angle of penetration when it moves above 69.10. and when it moves above 50.0 for a bullish setup. Look at the angle of penetration here. Above 50, it was very steep. Again, above 69.10. Here, it was very steep. All right, so you always want to find stocks that have steep angles of penetration, irrespective of whether it's a daily chart, weekly chart, hourly chart. It doesn't matter. You have to find it. For example, but now also remember, I'm only talking about 69.10 and 50.50 because this is when stocks are really bullish. Now the 30.90, yes, this happens too, but not as much because here, when a stock is trading in this level, it's not at its most bullish technical behavior. It's most bullish when it's trading, when the bullish sentiment is this high. And also when it moves above this level, sometimes it's bullish, but this is the most bullish setup. Okay, now let me show you something. Let's take a look at right here. Let's take a look at Bank of America, just for the sake of making this video relevant. Number one, I wasn't going to talk about this, but here, once we broke out there on the OIH, which corresponds to this red light break, we broke down there. This month here was good for a 27% drop, month of August. Right? In October, and also corresponded with a move below 50. We came back and moved above 50 in the month of October, good for a 30% recovery. So now this month, now, even though I'm digressing here, but it's okay. This red line, which was support here to the upside, once we broke down there, that was a significant primary break because this is a low, that's a low, this is almost a 3-year line. Once we break that, you got this big 27% drop. Now we've worked our way back about 50 in the month of October, but in November, we are stalling on the underside of this line. So should we continue moving lower, that is going to reinforce the idea that we are going to have a big down month. But what I want to point out here is I want to show you Bank of America on its monthly chart. Look at Bank of America. This is a weekly chart. It's a monthly chart I'm looking for. Look at the monthly chart for Bank of America. You see over here, this thing has a history of steep moves below 30.90. Like here, right here. That corresponds to 08. Corresponds to this drop here. Big drop. I mean, huge. Took Bank of America for the first time in years below 35, all the way to about $17, which now has become resistance to the upside, right? And then we had another revisit right here. I get another sharp move below 30.90. It's a sharp move. It's not a shallow move below 30.90, right? Right here. Corresponds to the crash of 2008. All right? Now, we are now here trading just above 30.90. I speculate in the month of November 2011, if this thing moves below 30.90 this month, and don't forget that we had already moved below 30.90 while it was moving from about 10 to about 6. Now it wants to start another fresh move below 30.90. And that's going to correspond with a primary break, because if you take that node and that node to a straight line, that would break right there. That tells me that this stock, I should not be surprised to see this stock move back below 6, back below 5, maybe even in the 4s, 3s, or 2s. I don't know. But I can just tell you that if that remains the setup for Bank of America, it's going to have a nasty month. What I want to talk about there was the angle of penetration works on all major levels. The 30.90, 69.10. Let me write this down. It works for all levels. The 30.90, the 50 level, and the 69.10. Remember, you add these two, you come to 100. That's what we have, parity, or 100%. Anyway, what I'm trying to say here is the The angle of penetration when you're picking stocks is also very important. It tells you what stocks might do in the future based on past history, or based on history. History is always in the past. Okay, so EP. I think, if I'm not wrong, this was a buyout. I think this stock was bought out somewhere around here. That's why the chart looks good, because not only was it breaking out here, it was moving above 69.10. So the buy point was when it moved above this level here, about $21, which is this monthly closing high, before it settled down for a couple of months. So you would have put an alert right there, and once the stock moved above 21, you would have been a buy. But I think it gapped up. I think it was the stock was a buyout candidate, and so that one you can remove from your list because that's already had its move. ETE. Again, not bad. Actually, it's better than it's good because you see it moving from about 1250 all the way to about 45 in about 2.5 years. That's a good stock. So what I would do on this one is set an alert here at about 44.50, which is the highest closing month in August. Now, in April. Now remember, you can go and find the exact closing price if you want, and I usually do. I can click on my tool here, and it's gonna give me the exact. Let me show you that. See, I can click on my tool here, and it's gonna tell me that the highest closing price was 44.70. So if you wanna do it the right way, you need to get the exact price. So 44.70 was the highest close in, what month was that? In April of 2011. Okay. So just set an alert, and if in the future stock breaks out, you want to buy it. You don't want to buy it here. Remember, we want to buy breakouts, because breakouts are where we are going to find the most strength and the biggest move in a stock. Okay, here's one. It's not a bad stock. Again, I like it just based on the fact that it's moved. It has a history of moving from 250 to about 35 in under 1 year. That's a big move. I mean, from 250 here to about $35. That's a good stock. Very good stock. I would set an alert maybe on this one, because the stock is trading close to it's already above above this level, which is the highest close right there. Since it's above that level, what I would do is maybe go and take a look at the weekly chart. Take a look at the weekly chart here. What I want to see is, I don't know, ever since the stock had this big move to about this level here, this is now a 2-year weekly, we pretty much had this seemingly volatile sideways action. And notice that we've never moved above 69.10. We've never moved above this level for years, going back to May of 2010. I'm going to remove that from the list, because the stock, number one, I see a lot of choppiness here. Choppy. It's not very tight. I see failed breakouts here, failed breakout here, failed breakout here, and here seems to be like we gave back a lot of the gains there. So it's not the most stable stock. I would say we might want to ignore that, just because it's not holding on to its gains. As far as I can tell, it's not a bad stock, but after it had this rally from here to here, it just seems to have gone into a long rest period. So I'm not enthusiastic about this one. Remember, there's so many stocks. I don't know, LQDT. Oh, I know what you wanted here. I'll give that to you. LQDT. QDT. That's all right. Now this is a good one. Let's look at the monthly, and I think I think this one was a buy either on my YouTube channel or for Martha.com subscribers. Number one, look at that. No, let me redraw that. I need to capture the high. Ever since the stock moved to a high, I have to try that again. Yeah, that will do. Once the stock moved to new highs there, the ultimate mother breakout was in play with this breakout. So stocks moved from 16 to about 36 almost in straight fashion. It seems like it, but it's not. It's a monthly chart. So nice move. Also, we had it as a buy here because we had a 1 month. Remember, on a monthly chart, we had a 1 month of rest and then a breakout. So that becomes a buy signal right there. And it was this again, it had settled down for a little bit and it made new highs on a monthly basis here. So this move from about 24 to 36, which is about 50% gain in a couple of weeks, came because the stock made a new high while it was above 69.10. So it moves above 69.10, which is huge right there. Moves above it, settles down, breaks out again above this level. That's a powerful stock. In fact, the best stocks are the stocks that break out to new highs when they are already break their MACDs, break out their MACDs to new highs while they are still above 69.10, because it can't get better than that. That's the best setup ever. And you can see this move here, 50% gain about 2-3 weeks here because the stock broke out right there. So RSI, and I can bet you that the MACDs were breaking out. See the MACDs ever since beginning of the year in 2011, this thing has been on fire. All-time highs. Again, all-time highs from about May or March of this year, which corresponds to March of this year, which is this breakout here. So the MACDs were on fire. Stock was on fire. This one is good. The only thing is now this is a 2-year weekly, is now you need to set an alert here because you see the stock is pretty much trading in this tight range. You want to put an alert because you notice where it's stalling exactly right there. I would say the high for the week is 33.50, give or take. So somewhere around here the stock can't move above that. I mean, it's almost like there's a software selling it exactly. I mean, this is too precise. Okay, but you want it the day it moves above this area, which has been resistance for many weeks. So I would say put an alert for about 30. I would say about 34, because that's right. 34 would be there. If it moves about 34, then you know something different is happening, which means it's going to be breaking out. Also, at the time it breaks out, you'd like the MACDs and the RSIs to be exactly where you want them for the ultimate mother breakout. So that's a good one. Macy's, not bad. Not bad. But what I don't like about this, just from this move up, down, up, down, up, down, up, down, up, down, up, down. It's not as fluid as, for example, LQDT. Look at the monthly chart for LQDT. It breaks out, settles down for a little bit, breaks out, settles down, but it's holding above the moving averages, as opposed to this one here, which always seems to come back below the moving averages here and here. So Macy's not bad, really. Not bad, but it's just not inspiring. It's not bad, but it doesn't give me the oomph I'm looking for. I want a stock that takes off, because that's when I know I'm going to have a good candidate. But anyway, as long as it's holding above that level here, which is the highest closing month in June, if it holds that, then that's good. That means that it's a breaking out. Right now it's on breakout mode about this level here, which is about $29. So it's not the worst performing stock out there. It's better than most. It's probably better than 90% of the stocks out there. but it's not going to be your blockbuster winner because it doesn't have a history of doing that. Let's take a look at MWE. Not a bad pick. Number one, I like the fact that it's had a nice, slow, gradual move from about $5 to about 50. That's what? That's 1,000% return. That's what I'm talking about. So that's a good stock. Notice it's kept the longer it keeps its RSI above 69.10, the more you know it's a quality stock. So I would put an alert here for about $50. If it breaks out, you want to be a buyer. This one is good. Looks good. The MACDs are also very close to a high here. So any push in price should push this higher, and this should also cross over. But you want at least to make a high here. So I think this one is one you can track with an alert about $50. Okay, price. Now this is a good stock. Notice this nice gradual move, very tight action. Even before this move from about 36 all the way to the higher 70s, is you had this nice move. It stayed well above the moving averages, which is accumulation. Notice once it broke out here, corresponds with this breakout, the high it made a 3-year high right there, which is August, which corresponds with this breakout there. You see that breakout right there? That was a move to new 3-year highs. Another move to 3-year highs here, which corresponds with this surge from here about $20-30. It spiked. And then we settled down here for about 3 months. We made a high there, so you would have put your alert there. Watch the stock for a couple of months, and at some point the stock would have moved above this level here. You would have gotten the alert, which again corresponds with the stock not moving below 69.10. So it defended 69.10 and then moved higher and made a new high in price. Remember, what did I say? Stocks that make new highs in RSI while they break out and the RSI is already above 69.10 are your best stocks ever. And so we had a move from about 35 to way above about 77, which is more than a double in about 1, 2, 3, 4, 5, 6, 7 months. So now we can't put an alert for this one because we need the stock to settle down for at least a month. Like the last buy was here at about 66. Remember, on a monthly chart, once you determine a closing high right there, you need at least 1 month of rest and then a breakout on a monthly chart. At least 1 month of rest, like right here. We have 1 month of rest after this high. So your next buy point on a monthly chart is when it moves above that level, which would have been about 66 or 65.50. On a weekly chart, once you determine your closing high on a weekly basis, you should have at least 2 weeks of close below this close. So let's say if this close was $10 as an example, $10. Whoops. $10. You want the subsequent week, 2 weeks on a weekly chart to either be below $10, let's say $8 or whatever, but below it. Even the next week could be higher than this week. Maybe this week could close at $9 and this week at $9.50, but yet below $10. You want at least 2 weeks, of rest on a weekly chart for you to know that the breakout is fresh. Otherwise, if you have no breakout like here, no rest, this is a continuation rally. Likewise, on a weekly chart, if you have just 1 week of rest and a breakout, it's not a breakout, it's a continuation of the prior rally. Make sense? Try and get a weekly chart here to show you what I mean. All right. Okay. See this break right here, this period right here? You had a closing high right there, and then you had 2 weeks of rest, and then a breakout. right there on week number 4, which corresponds to this black bar right here, right? You broke out. So that was a fresh breakout. On the other hand, you had a close right there and 1 week of rest and then a breakout. That's not a breakout. That's a continuation of the prior breakout. It's not a new breakout. On a weekly chart, you want at least 2 weeks of rest. Just like we had 2 weeks of rest here. You had a closing weekly high, rest number 1, rest number 2, and then a breakout above that price. That's a fresh breakout. If it's week number 3, like it did here and here, week number 3, because there was a closing high there and a rest period, and then a breakout. That's a continuation rally. And you always want us to buy fresh breakouts. You're not looking to buy continuation rallies. So here, until we get 1 month of rest, we can't know when to buy this stock. We need at least 1 month of rest, and then we are going to determine what the closing high was. And once we have a breakout above that, then we can know it's a fresh breakout. In other words, now remember, I know this video is getting a little bit long, but I wanted to point out something here. Great stocks will have about 3 to 5 breakouts before they stall or their rally ends. We have breakout number 1 there, breakout number 2 there, breakout number 3 there, breakout number 4 there. So over the last year and a half, the last close to year and a half, give or take, this stock has had, we can even say there was a breakout here. So we have breakout number 1, breakout number 2, breakout number 3, breakout number 4, breakout number 5. Whenever you see stocks having broken out for over about year and a half, from about after this base, then we broke out to breakout number 1 there. Now we've had 5 breakouts. Usually that's you're getting close to the end of a rally. So always remember that. It's not, stocks can continue breaking out for years and years and years, but 3 or 5 successful breakouts, stocks run out of steam. So this one I would track it, but I would also know that if I find one that has fresher legs, I would go with the one with fresher legs. This one seems to have moved. This one has already had its run. Now it could break out again and have a great stretch, but you start seeing it's closer to the end of its rally as opposed to the beginning of a fresh move. That concludes the stocks that I was trying to get analyzed for you. As far as I can tell, you are on the right track, and I'm very encouraged by where you are right now. Everything looks good. You just need to keep polishing, but you are definitely on the right track. Eric Moade with Moade.com. Peace and blessings.